Hey everyone, Dan here. Before we get into it, if you enjoy these videos, please hit the like and subscribe button. It helps a lot. And also keep in mind that these are my own thoughts, opinions, and ideas. These are not meant to be, nor should you take them as investment or trading advice in any way, shape, or form. Do your own due diligence, put in the work for yourself, and make your decisions based on that. Enjoy. All right, folks, here we are after market close on Thursday, September 23rd. We're going to take our daily look at SoFi. And just to reiterate what I said last night, if you are a newcomer to SoFi videos or if you're dipping your toes back in the SoFi waters, I do a SoFi video every single trading day, after market close or very, very close to market close. And that's been the case for months. So this isn't a fly-by night. I'm intending to do this for a very long time and don't have any intention of stopping these. So if SoFi is probably going to be interesting you for the foreseeable future, please subscribe and you'll get notifications every single trading day when my SoFi video comes out. But we're really familiar with the stock here. We've been through these hype days with IPOE and then the choppiness and the short squeeze and the hype run up and then the lockup ending and the downturn and then the run up before earnings and the drop on earnings and then our recovery since then. So we're really familiar with the stock and have some opinions. If you're curious about price targets as well, I have a price targets video just to temper that by saying I'm going to re-evaluate my price targets after the Q3 earnings report that's coming out in November. And so those will be adjusted then. So if you go ahead and watch that, feel free, but just know that there's going to be an adjustment coming in November. So, and also if you haven't watched before, I have 2 young kids in the house and sometimes I can't control the screaming. I can never control the screaming. I can try to edit it out afterwards. So there was just screaming now, very close to my door, and apologies if that comes through, but we work through it as best we can. Okay, so finally getting into it. SoFi today had a really nice day. As we said in yesterday's video, this looks like it wants to really go on a run to me. And if you go back to if you go back to like Tuesday's video or something, Monday or Tuesday's video, I point out why in there, but essentially it's sort of threefold. It was holding this trend line. It was doing a fake out on the MACD. We had additional volume coming in. It was peeking its head. Well, not at that point. It wasn't peeking its head above here, but it was moving in the right direction. There was a lot of precursors to this run. So that's why I'm hoping that this is sort of more meaningful and is going to continue to run and not just sort of sell off and make a sad face kind of like this. And so for this, at this point in time, what I'm looking at is a few things. One, I'm going to clean the chart up. So I'm going to get rid of this $13 zone. I'm going to leave 14 for now, though I really hope we don't need it. What we saw today essentially was working over this 16.99 supply and demand zone, which is this blue area here, continuing to move strongly through this upper trend line. So that's looking all really, really solid to me. And making a run at this 1754 will be the next thing that I'll be looking at. I had said in last night's video, I wouldn't be surprised if we come down to try to just sort of like check the 1629 support to see if it was there. But if we were likely to run, then maybe we won't even need it. So we did get into the next sort of range of price, which is, the space between the supply and demand zone as I see it. 1699 to 1754 is the range that we're in right now. So if we can continue to do that, even again, if we come down and test this 1699, which I think we did today, we'll look at the daily chart in a minute, that to me would just sort of reconfirm, if it holds that level, that we're good to try to make a run at 1754. Now the next best thing that I want to see, which is often what happens in these things. So you see this upper trend line that was holding above these 2 candlesticks. And then yesterday we saw this bump through, and that's when we were like, okay, this looks like she wants to run. Now what I like to see is the price action to treat this previous resistance trend line as new support. So whether or not we stick exactly to that 16.99 or not, eventually that's going to be necessary to be above this trend line come October. But until then, if we do dip below, I still would like to see it hold this trend line to confirm that we are going to keep moving in an upward direction, even though we have this big gap up and have made pretty significant moves the last few days. And I think we're fine to keep these for now. Tomorrow if we close above, or if we're really, really pressing that 1754, we'll come in and plot what I would view as the next level up. But I think for now we're looking quite fine. The volume today, which could still be sort of settling, so it may end up to be more than this, but 29.2 million as we have it now. So definitely not the 55 million that we had yesterday. But if you go back several weeks to my videos, or maybe a couple of months at this point, I was sort of begging for volume to get into like the 17, 18, 19 million range. And so to see it so consistently much, much higher than that is really, really buoying my spirit in SoFi, and the outlook that I have for the potential for this run to really put itself in place and just kind of, take off. We've seen this as sort of a sticking point in the market as it stands today. So a few weeks or months ago, I would have said this was more traditional sort of swingers markets. Lately, though, it's much more concretely built around momentum, and whether that's sort of penny stock momentum like you see in CEI, or it's momentum like you see in Upstart or Digital Turbine, which is APPS. Those momentum plays are really sort of in favor at this moment. And so I'm looking less for the traditional setups of MACD bullish cross below the baseline, setting up over the 20 or 50 or 200 MAs, so on and so forth. I'm mostly looking for it to keep the momentum through volume and through really, really solid, steep price action over key levels, which is what we're seeing with SoFi for now, but it's really just sort of like 2 or 3 days into that. So it's early on, but by nature of watching something every single day, you are apt to try to catch things early on because you watch it every single day. But yeah, that's what I'm looking for at the moment with SoFi. Now, if we take a look at what we saw today, I hate how it's so sad that SoFi just has one of those ugly daily charts where it's so not smooth. It's really hard to look at. If we go to the 5-minute, let's see if that's a little bit easier to look at. Not really. Maybe if we zoom in. Okay, so little sell-off, right? Didn't need to come down to test that 1629. Stopped itself at 1668, which is nice to see. No real hammer or anything that was put in there. It just sort of shifted gears and quickly made a run at the VWAP, rejected off the VWAP. The VWAP at that point, I was sort of giggling to myself, was just running right along that 1699 resistance zone which we had plotted. So it was happening to bounce off the VWAP. It was also happening to bounce off the resistance zone that we had plotted in last night's video. And then flip that very concretely to support, and then just tried to make a run, caught support there again, tried to make a run, caught support there again, and then just kind of worked itself in that range for a bunch of the day, which to me is fine. It's done a lot of running up. What I mostly look for it to do is continue to stick itself over the support zone nearest to it, if it is close to it, or sticking itself concretely to or slightly above the VWAP. When that is the case, that says to me there's probably a lot of folks who have relatively profitable positions at this point, and not a lot of folks looking to come in to dump those positions because they're happy being green and wanting to see if it will ride further. Now, again, that's sort of speculation on my part as to what folks are thinking or feeling, but that's generally what I consider is happening when we see this sort of chopping around right around the VWAP for most of the day. So to me, that is a fine sign, and I would take it generally as a bullish sign at the moment, especially since the run-ups recently. Folks have also sort of consistently asked what's up with the big sells and or the big buys when those happen at the end of the day. I don't know. I don't worry about it too much. I mean, the same thing happens at open, right? There's huge sell volume that came in at open, 3.2 million, minus 1.34%, but we just turned it around, right? Those are just folks who are timing a buy or a sell at some part of the day, and I don't necessarily think that there's anything to it. Now, if it was something of a more systemic run up or drawdown into close, then that I would feel differently about that. But this to me is just continuing to move sideways, and it just happens to be that there's always big volume at the beginning and at the end of the day, and it has to be either green or red. So I honestly don't think that there's much to it, at least not as far as I can tell. On the order flow side of things, we do see large scale orders continue to come in, though we did see some outflow today. So in previous days, I think if I'm recalling correctly, we saw no outflow and just some solid inflow. So today we saw a bit of a mixed bag, but still more inflow coming in from presumably institutions coming in with those large scale orders. So to me, that was an additionally good sign. And I know that the outflow beats the inflow on the medium and small scale orders, but again, to me, there was just so much choppiness around the VWAP that I think that there was just a lot of repetitive buying and selling. And so given the run up that we had over the VWAP at this point, I think there was just more selling pressure to consume to keep it around that VWAP area than there was buying pressure necessary to do so. So that's what I would attribute that to at the moment. But this is all just to say, to me, I'm still hoping that this turns into a momentum play here, and that we're able to at least hold this green upward trend line as support and make our first run at 1754 like tomorrow. Today we didn't quite get there, though I didn't check. This didn't adjust very well. Yeah, not that close. 1734, so within 20 cents, but I would be looking for it to at least sort of try to make a run at that psychological 1750 to consider that we're sort of attempting for the first time that 1754. Now, quick check-in on the data side of things. Still plenty of room left for return potential from analyst consensus, as I'm sure you know. Shorts continuing to come in just a little bit today, so they continue to dip toes in, bringing them to 7%. So as we have said for, months, but specifically recently when we saw short interest get up over 10%, that's when I start to kind of throw up some alarm bells and say, hey, just be aware there could be some selling pressure, some distorted price action coming in to SoFi as shorts are increasing their positions. And then certainly as it gets to 15, then it starts to feel very, very heavy. But, first thing is first, we'll see if we even get into double digits or not. And if so, then we'll start looking at things more closely like cost to borrow, utilization rates, and go from there and sort of talk more in-depthly about those things as they may come up. All right, folks, I think that will do it for this one, but it was actually really nice. Feel free to stop the video here if you don't want to hear something nice. But scrolling through the comments last night was the first time in a long time that I've seen some really nice stories about folks who were able to exit their positions profitably or trim some positions and put some profit on the table. And this is after several months, all of July, all of August, and probably at least half of September, of some really sad folks who felt just like bag holders who didn't know what to do, who felt like maybe they had over risked. And that's why I always say you really, really have to pay attention to your risk, keep those things in check, know what it is you're doing. Are you trading? Are you investing? Are you swinging? Are you intraday? Just know these things and adjust accordingly. And just know in general what your risk tolerance is. Can I risk 10% of my profile? Of my sorry, the screaming in the background is just immense, of my accounts in this, or should I just risk 5%, and so on and so forth. But anyway, it was nice to see those and some folks that have been around the channel for a long time clearly having some good wins, and I felt really, really glad for those folks. And it is I noticed this from this run up that was preceding the merger dates and was also a short squeeze at that time with IPOE. Folks get very, very behind you and very, very, appreciative of the channel and the analysis and the consistency and things like that. And then a bunch of trolls, I'm sure, come in and folks just kind of get sad, and some get very nasty at that point, and some, start to make proclamations that like you've led people astray and, you're making all these mistakes and so on and so forth. So this is just to say, we all go through, like well, stocks go through these ups and downs, and we all go through them as well. But I would just say, as best as you can, just in general, I think this helps people sort of prolong their trading career if they want it to be so. Try as best you can to keep a level head. A big piece of that will be by keeping your risk in check. If you don't feel like you're tremendously over leveraged and that this is sort of like keeping you up at nights and you're nervous about it over the weekend and you're really worried about the money that you have tied up in X, Y, or Z, you probably are over risking. And I would really, really consider that and really evaluate it, especially now if you're green. I would just, I mean, even if you're not green, I would really, really consider why, if it did seem to overly adversely affect you, stress you out, make you sort of less of the person or the trader that you want to be, during downturns, during heavy drawdowns even, I would just evaluate sort of like where your head is in general with trading. Do you get way too excited about green days and way too down about red days? Do you have a healthy level of understanding that there's learnings and takeaways from everything versus it being a zero-sum game of just I win or I lose? And like I said, have you put way too much money that you can't afford to lose in any position? And is that really, really making it unhealthy and unpalatable for you day in and day out? I would just really, really consider those things now that we may have a little bit of breathing room, because you never know when that's going to change. And I just think it's worth considering. And if you didn't need to or didn't want to hear that, then I hope you ended the video when I said to stop it if you don't want to hear something. But it was nice to see those comments last night. It had been a long time, and we've been here together for a while, so I definitely recognize the names and certainly know who's consistently commenting and stuff like that. But please, please, please assess the risk, assess the stress that it puts on you, because it's not worth it, to be honest. If it puts you in a bad place mentally, physically, emotionally, relationally with your friends and your family and things like that, it's not worth it. So I would just rejigger if you need to get yourself in line with those things. Okay, Dad's soapbox set aside for now, and we will move on from today's video. But I really, as always, appreciate you watching, and I will see you in the next video.